Hello, everyone. I hope you guys are having a wonderful day. This is Mickey here. It's my Hedgeline Trading channel, and here I do analysis on the markets, the S&P 500, the triple Qs, the Dow Jones, and the Russell 2000. I also look at commodities sometimes and the dollar and interest rates, and I use a market cipher. Right now, it's probably the best tool, in my opinion, to track the markets in terms of where it's going. And you guys can use also a Lux Algo, which is, by the way, the live stream I purchased for you guys. You guys can use it as much as you want. It's always going to be there 24/7. And right now, just looking at we'll start off with the larger time frames. And on the monthly time frame, we've seen a pretty big shift now in the Heikin candles. We were really bullish at the beginning, or at least at the very least we were neutral, and now we're starting to shift towards the bearish side. And this ABC pattern right here may really start to play out sooner than later. If we get this, we could see continued drop in the S&P 500, and obviously interest rates rising is quite a bit of a concern right now, especially in the 10-year and the 20-year, and 2 years been just consolidating here at its new highs. It's probably going to come back and retest this level as support, but there is a floor on yields, and again, Jerome Powell has I've stated this many times in many meetings that yields are going to be higher for longer, but the markets seem to believe another story, another narrative that he was bluffing and he's going to cut rates anytime now. And this is probably finally the market starting to believe what Jerome Powell has been saying for like the last 9 months of raising rates. And I mean, right now you can see in the last 2 days we erased a lot of gains. I mean, that's what happens in big market sell-offs, and it would be not of concern if it was light volume, but this is really high volume selling. What we're seeing 104 million shares today on the S&P 500, or the SPY, sorry. And then yesterday we actually saw a good amount of volume as well, 82 million shares, and it was a big downside red candle as well. So again, this is obviously a big sell-off that we're getting at the moment. If we get a bit of a retrace, then it's going to be a shorting opportunity, in my opinion, as we make our way down to potentially, I have some targets here for you guys. It's going to be right around 4,300 to 4,200 here on the S&P 500. But we're probably going to come back and retest at this level here as support. And then we might come back down even a little bit lower, and we may retest. Sorry, not this channel here. I should get rid of this channel. It's been here for a while. But we're probably going to come back and retest between these two lines here, between the 4,000 level to the 4,200 level. And again, I know it's a very wide range, but that's probably what the market is going to do. And you do have the 200-day moving average here, but it pierced below that would start to cause some pretty big panic selling, and it could get it out of its hand. That's why I say we may come back in this range here and start to form some level of support, and at which point you may get a relief rally, and then you're going to start to come back up, and you'll start to fill some of these gaps that we're creating. Because if the market keeps gapping down and creating these gaps, eventually the market's going to have a relief rally, and it's going to fill all these gaps. And if this bounce fails, and it fails to make a new high, then you're going to continue down, and you're going to continue to make your way down to new lows as the market finally realizes that interest rates are going to be higher for longer. And what's very concerning as well is that the market really started to believe in this bullish case that everything's going to be fine, especially with the entire S&P being lifted by only 7 stocks, and you didn't really see any broad market participation. You saw the small caps get a bit of a rally here, but it failed. And it failed to break its highs, and it started to come back down. And now you're really starting to see the IWM really starting to break down, which, by the way, the IWM is the Russell 2000. It's the same thing. It's just the ETF. And the Russell 2000 has now broken major support. And you actually have a Head and Shoulders at the moment that's in play. And the target for this is significantly lower. But you are going to get some bounces here and there. You're not going to go down in a straight line. So obviously the target would be pretty much the lows back down at 1631. But we'll have to see how long it's going to take for us to get there, and if we do get there at all. Okay. So just looking at the S&P right now on the daily time frame, we'll take a look at the SPY ETF. So the SPY at the moment has seen a dramatic decrease in green money flow, and you're starting to see the momentum wave starting to extend. The VWAP is extending as well, but right now there's no bottom in sight until we get a significant bounce. And then if you start to cut into that red money flow, that's when you're going to start to enter the danger zone, and that's when volatility can really start to pick up, and you can see that the market may start its trend towards the downside, and it may not stop until we get back into green money flow, right? So as you guys can probably tell, in the last market, the recent market drop that we got in 2021, 2022, when we crossed into that red money flow, we actually saw a little bit more downside, and then we got a relief rally, right? And that relief rally was like around 8 to 9%, and that lasted for a good couple of weeks. And then after that, it failed to make new highs, and then the sell-off continued. And then we continued in red money flow, and it continued until you got another green dot, a significant bounce in the market, and then you had another relief rally, continue up, and then you had, I don't know how much of a rally this was, like 12%, and then again still in red money flow, and then the drop continued, and I think that's where we could be headed in the coming weeks and months, at least into late October. If we take a look at just the futures right now, you're almost cutting into red money flow. If you take a look at the Yuanda chart, you're actually into red money flow at the moment. If you look at the IWM, it's been in red money flow for a good amount of time now, and it's just continuing. So I don't expect the small caps to benefit much here. I think the small caps may be going to hell very soon if this continues. But we'll have to follow the charts and see how everything plays out. Right now, the Russell 2000, the IWM, is potentially playing out this ABC pattern as well. And the downside targets for the IWM is significantly lower. But this is the monthly chart, and this can take a very long time for it to play out. But looking at that money flow on that monthly time frame on the IWM, it's really not inspiring. It's actually very depressing when looking at it, and I don't see how the Russell could really continue up here. I think it may have to come back down, reset, and then once all hope is erased, at that point I think you could start accumulating long positions. But we're going to be in some economic troubles in the coming months, and I mean it's just right now it's just be cautious, and what you want to be looking for is to look to short these bounces that we're probably going to get in these markets, and you want to be playing puts, or at the very least you want to be sitting in cash. If you're not intrigued into shorting these markets, then you probably want to just get out, take your winners, sit on cash for a little bit. I mean, you should have taken your profits weeks ago, but I mean, it's never too late, obviously. But I'm not trying to entice anyone into panic selling anything at all. If you have a stock that you really believe in, and then you think that it's a great fundamental, don't listen to what I'm saying, right? None of this is financial advice. Always do what you want. It's your money, and I'm just some guy here just giving out some analysis on the markets, right? So essentially that's what I'm thinking right now for the small caps. And looking at the triple Qs, the Nasdaq. So the Nasdaq has been following this monthly pattern here for quite a bit of time. This is just a wave 4 we're going to get into a bigger fifth wave here. But my opinion is going to be that the Nasdaq is going to fall apart even quicker than the Russell so not the Russell 2000, but the S&P 500, because it's so high in the sky, and it's just been carried by 7 stocks. And right now, these 7 stocks, Apple, Amazon, Tesla, Microsoft, Google, Meta, they're all starting to, I think 1, 2, 3, 4, 5, 6. I think I'm missing one, maybe 7. So we need 7. 1, 2, 3, 4, 5, 6. I think I'm missing one of the major stocks here. I don't know where I put them. Maybe it's Nvidia. It's all the way down here. So essentially, the Magnificent 7 are really starting to implode a little bit here. You can see Apple took a huge hit the other week, and I think that was my first signal that trouble was ahead in the market, especially when Apple starts to take a beating, and you start to see, it's started to get under all of its moving averages, and a lot of bullish YouTubers would just buy the dip. This doesn't matter. Just keep buying the dip, buy the dip. And right now you're starting to see, Apple retesting these lows many times. And if you guys know anything about technical analysis, the more you retest a support level, the weaker it is going to get, and eventually you are going to break it. And right now what we got is a very bearish candle, in my opinion, on Apple. And I mean, you could talk to any bullish YouTuber, they'll always make the case that it's very bullish. They never look at the bearish case. And if you do look at the bearish case, it's always to them the most unlikely situation, because they don't know how to look for market tops. And right now I think we could very well have a market top in place. And until we take that high out, it's gonna be the case that was the top, and we're going to head back down now. And right now, looking at the not the S&P, Apple, it looks like we may start to head back down to this level here, right around 156 to 160 is going to be a good amount of support. You do have that 200-day moving average, so you're probably going to get a nice little bounce there, maybe come back up, retest it, and then you'll start to come back down. So again, that's how it's going to play out into an ABC correction. How long this C wave is going to take to bottom out, that is it's going to remain to be seen, right? And if we take a look at Meta, a lot of these stocks are still pie in the sky, very extended. Tesla especially, I think Tesla is going to be it's going to be making its way down. Obviously, I don't know if it's going to go to 91, but I do have some price targets right around 180 to 170, I believe, right around that area. I think we are going to find a little bit of support, basically from these pivots, right, or from these pivot lows. I think we are going to find a little bit of support, and then we're probably going to get a bounce from there. But I know it seems very unlikely now, but I mean, if you asked anyone in a couple of days ago, if you thought that the S&P was going to start selling off, it's always very unlikely, right? Until it starts to happen, and then you're starting to see volatility spikes. And I've been positioned for months and weeks now, expecting a very big sell-off in the market, and it's starting to come, and I'm already starting to reap the rewards in only 2 days of selling. So if this does continue, I believe I will start to take some chips off the table, just to cover some positions, right? You always want to take some money off the table. But right now, you can see that we are in a difficult situation in the markets. And finally, we'll just cover it up with the Dow Jones. So the Dow Jones, something very similar. Again, just an ABC pattern correcting up. And you're starting to see these momentum waves, not just on the Dow Jones, but on all the charts except for the IWM. There's no momentum wave past the zero line at the moment. The QQQs, the SPY, and the Dow Jones, they're all starting to curl in just very slightly. But if you see in any more downside in this market, the momentum waves on the monthly are going to start to curl in even more, and then you're going to get a red dot confirmation. And that, in my opinion, that would be very bearish for the markets. It would be very bad, and then you're probably going to start to see even more significant selling. And then, at that point, it's all speculation of how low we'll go and what the news is going to be in the market. But right now, the way yields are positioned, and you can take a look at the TLT, and I've been tracking this as well. Something that I do want you guys to watch is that the TLT and the S&P 500, they've always traded against each other. So sometimes they've always traded with each other, but sometimes they can get separated. So you guys can probably tell, well, sometimes the TLT, which is all the time, by the way, that when the TLT goes down, you can see that the S&P 500 can diverge and go up. But eventually, the S&P always follows the TLT towards the downside. And we've seen this numerous times where the market can get delusional, irrational. It'll go with the TLT, but when the TLT comes back to reality, it starts to go down. Bond investors, right? They start to sell out, or they start to sell out the TLT, and they start to unload, and it starts to go down. Then you start to see that the S&P will go a little bit higher, and then it'll start to crash really quickly. And right now, the more recent scenario is that we've seen that the TLT has been dropping basically since April. It's been in a consistent downtrend, and today we just made a pretty big drop in the TLT. We hit the 90 level. We haven't seen this level in over, oh my god, I have to go so far back. We haven't seen this since 2011. So that kind of tells you what kind of situation that we're in at the moment. And right now you saw that the S&P is starting to correct very dramatically and very quickly, because it has diverged from the TLT for so long, right? So just looking at it, it's not looking that great. So you guys can probably tell, right here, we rallied up, rallied, not stop, not stop, not stop. AI this, AI that, bullish, bullish, bullish. Yields are going to be cut soon. It's going to be, you want to buy now before they cut the yields. So then, because when they do cut the yields, it's going to rally even more. All right. So right now you can see that the yields are not being cut, and it's going to be higher rates for longer. And finally, the TLT's got it right, and it's been going down, and now you're starting to see the S&P 500 start to correct. So it's got a lot of correcting to do. We're probably going to come back down to the 4,200 to 4,000 area, like I said before. And I mean, it's just the way it's going to go. And is it guaranteed that it's going to do that? No, but it's probably what I'm thinking is going to happen, and that's just the probabilities, in my opinion. And then looking at the S&P 500 versus the DXY, I mean, same thing essentially, except this one's a little bit more, in sync. It tends to diverge a little bit less. But yeah, you can see when the DXY goes up, S&P 500 goes down, DXY goes up. S&P 500 goes up, DXY goes down. So a weaker dollar is good for the markets. And right now you're seeing the DXY rally significantly, and it is very, very bad for the markets. But they've held up for quite a bit of time now, just defying, not wanting to believe, not wanting to accept the reality of the situation that's going to be coming. And it's that the dollar could very well keep going potentially to 106. We could see that on the market cipher chart here on the monthly time frame. You can see that the DXY actually put in a nice little bottom here with a green dot on the monthly time frame, looking very bullish. So again, the trend may be higher in the dollar, and that would be very bearish for equities. The same thing here on the weekly. I mean, the weekly's had a bounce since July, and it's been going up nonstop. And that's kind of when the market started to top out in late July. And right now, you are at the zero line with the DXY. So the DXY could collapse as well, right? That is also a possibility that the DXY plummets. But if that's the case, that means they're cutting rates. And if they're cutting rates in an emergency, that means it would be, a very big surprise to the market. And that, in my opinion, would be very bearish as well. Because if they're cutting rates and something bigger is happening in the economy, and that's never good. Anyways, the daily time frame, no signs of a top yet. We're in a very strong uptrend. Lots of green money flow. I wouldn't get in front of this thing just yet. I would just sit on it, and until we see a significant top in the dollar, then I wouldn't be long any equities as well. Anyways, hopefully you guys enjoyed this video, and you guys enjoyed the Lux Algo live stream. Love y'all. Peace.